preparing for a Vostro Reconciliation interview. You've reached Candy Mentor, and this video is for you. We'll walk through 25 key questions you're likely to face. For each question, you'll see a sample answer followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. What is Vostro Reconciliation? Vostro Reconciliation refers to the process of reconciling a bank's Vostro account. In banking, a Vostro account is an account that a correspondent bank holds on behalf of a foreign bank. It usually involves reconciling balances, transactions, and fees between the two banks. This ensures that both banks' records match and are accurate. Vostro Reconciliation is the process of matching a bank's internal ledger for a correspondent bank's account against external statements, usually SWIFT MT940 or MT950. I focus on value date, transaction reference, currency, amount, and debit credit direction. The objective is to prove the account balance, identify timing or posting differences, and ensure client funds, liquidity reporting, and regulatory records are accurate before cash positions are published. While answering, focus on the account relationship, matching internal ledger entries to external statements, proving balances, identifying breaks, and why accurate reconciliation matters for cash control and client servicing. Question 2. Can you explain the difference between Nostro and Vostro accounts? The difference is mainly perspective. A Nostro account is our bank's account held with another bank, often in a foreign currency. A Vostro account is another bank's account held with us. For example, if Bank A maintains a USD account at Bank B, Bank A calls it Nostro, while Bank B calls it Vostro. In reconciliation, I always clarify whose books I am matching, because debit and credit signs can appear opposite. Make sure to cover perspective. Nostro means our account with another bank. Vostro means another bank's account with us. And explain how reconciliation ownership differs by institution. Question 3. What documents or data sources do you use for Vostro Reconciliation? I would usually use the internal account ledger, SWIFT MT940 or MT950 statements, payment system reports, transaction confirmations, and sometimes MT103, MT202, or MT202 COV messages for payment details. For unresolved items, I check reference fields, counterparty details, value dates, charges, FX rates, and operational queues. The key is not just matching amounts, but proving that each entry belongs to the correct account, date, currency, and payment instruction. In your answer, talk about internal general ledger extracts, customer account statements, SWIFT messages, payment systems, transaction references, confirmations, and investigation tools used to support matching and break resolution. Question 4. Walk me through your daily Vostro reconciliation process. My daily process starts by confirming that all statements are received and loaded completely. Then I run automated matching using amount, reference, value date, and currency. Unmatched items are reviewed manually and categorized as timing, missing posting, duplicate, charges, FX, or investigation breaks. I prioritize high-value and aged exceptions, raise cases with payments or correspondent teams, document comments, and certify the reconciled balance. Finally, I prepare exception reporting for management review. Be sure to mention statement receipt, data upload, automated matching, manual matching, break categorization, aging review, escalation, balance certification, and reporting to operations, treasury, or client service teams. Question 5. What are common reasons for breaks in Vostro reconciliation? Common breaks come from timing differences, missing postings, duplicate entries, incorrect value dates, bank charges, interest, FX conversion differences, and wrong payment references. I also see breaks when a payment is posted in the payment system but not reflected in the general ledger, or when a correspondent statement arrives late. The important point is to classify each break correctly, because a genuine accounting error needs correction, while a timing item may clear next cycle. While answering, focus on practical break types such as timing differences, missing ledger entries, duplicate postings, incorrect value dates, charges, FX differences, wrong references, reversals, and unmatched SWIFT messages. Question 6. How do you investigate an unmatched high-value Vostro transaction? For a high-value unmatched item, I first confirm the amount, currency, value date, account number, and debit credit direction. Then I trace the payment reference across SWIFT messages, payment systems, ledger postings, and statement lines. If it looks like a missing or incorrect posting, I raise it with payments or accounting immediately. I document every check, attach evidence, and escalate based on materiality because high-value breaks can affect liquidity, client balances, and risk reporting. Make sure to cover urgency, checking references and SWIFT details, validating amount and currency, reviewing payment lifecycle, contacting operations, documenting evidence, and escalating based on value and age. Question 7. How do debit and credit entries work in Vostro Reconciliation? Debit and credit direction depends on the reporting perspective. In a Vostro account, if the correspondent bank's balance with us increases, we may show a credit to their account. If funds are paid out, we debit the account. However, statement formats and internal ledgers can present signs differently. So I never rely only on plus or minus symbols. I verify the transaction narrative, account impact, and payment direction before deciding whether it is a true break. In your answer, explain bank perspective, customer account impact, opposite signs between statement and ledger, why direction matters, and how misreading debit-credit indicators causes false breaks. Question 8. What is the role of SWIFT MT940 and MT950 in Vostro Reconciliation? MT940 and MT950 are SWIFT statement messages used to report account activity and balances. They include opening balance, transaction lines, value dates, references, debit-credit indicators, and closing balance. In Vostro Reconciliation, they serve as the external statement source against which internal ledger activity is matched. I use them to confirm whether transactions posted internally are reflected by the statement, and whether the closing balance agrees after accounting for outstanding valid exceptions. Be sure to mention that these are electronic account statements, include opening and closing balances, transaction lines, references, value dates, and are used as external evidence for matching. Question 9. How would you handle a difference between opening balance and previous closing balance? A mismatch between prior closing balance and current opening balance is a serious continuity issue. I would first verify that the previous statement was final and the current statement loaded completely. Then I would check for missing statement sequences, amended statements, back-valued corrections, or system upload errors. Until the opening balance is proven, transaction-level reconciliation may be unreliable. I would escalate to the statement provider or internal technology team and document the issue clearly. While answering, focus on validating statement continuity, checking missing statements, late corrections, back-valued entries, system upload issues, and escalating because balance discontinuity affects the whole reconciliation. Question 10. What is a value date and why is it important in Vostro Reconciliation? Value date is the date from which funds are considered effective for settlement, interest, and cash availability. It can differ from booking date, which is when the entry is recorded in the system. In Vostro Reconciliation, value date matters because two entries with the same amount in reference may still be wrong if the settlement date differs. A value date mismatch can affect interest calculation, liquidity reporting, customer balance availability, and aged exception reporting. Make sure to define value date versus booking date. Explain its effect on interest, liquidity, settlement, aging, and why mismatched value dates can create timing or accounting breaks. Question 11. How do you distinguish between a timing difference and a genuine reconciliation break? A timing difference has a clear reason and is expected to clear, such as a ledger posting made before the external statement reflects it. A genuine break has no valid support or indicates an error, like a missing posting, wrong account, duplicate entry, or incorrect amount. I check source systems, cutoff times, value dates, and prior patterns. If a timing item remains outstanding beyond the expected window, I reclassify it for investigation and escalation. In your answer, talk about expected clearing pattern, transaction support, value date, cutoff timing, recurring behavior, evidence from source systems, and when to reclassify aging timing items as true breaks. Question 12. What controls are important in a Vostro reconciliation process? Strong controls start with complete statement receipt and accurate data upload. Then there should be approved matching rules, maker-checker review, aging thresholds, high-value escalation, and clear ownership for each break. Balance certification should be supported by evidence, not just a system status. Segregation of duties is also important, so the person reconciling should not independently approve accounting corrections. A good audit trail helps demonstrate that exceptions were reviewed, explained, and resolved properly. Be sure to cover maker-checker review, completeness of statement feeds, automated matching rules, aging thresholds, high-value escalation, evidence retention, balance certification, segregation of duties, and audit trail. Question 13. How would you explain an aged break to your manager? I would present an aged break with the key facts first: account, currency, amount, value date, age, and transaction reference. Then I would explain the current root cause, actions already taken, pending owner, and expected resolution date. If the break affects client balance, liquidity, or financial reporting, I would highlight the risk clearly. I would avoid vague comments like under investigation and instead provide evidence-based status with a next action. While answering, focus on concise communication: amount, currency, age, account, root cause, actions taken, owner, risk impact, expected resolution date, and whether escalation or accounting adjustment is required. Question 14. What would you do if a Vostro statement is not received on time? If a statement is missing, I first check whether the feed failed, the message was rejected, or the provider did not send it. I would contact the relevant SWIFT, operations, or correspondent team and request a resend. If available, I use contingency reports only as temporary support. I would log the incident, notify stakeholders, and avoid final balance certification until the official statement is received or an approved exception process is followed. Make sure to cover checking feed status, contacting provider, using contingency sources, logging incident, estimating risk, notifying stakeholders, and avoiding unsupported balance certification. Question 15. How do bank charges and fees create Vostro reconciliation differences? Bank charges can create differences when one side records a gross payment, while the other records a net amount after fees. Sometimes fees are posted separately with a different reference, which makes automatic matching difficult. I would check the payment instruction, charge code, correspondent fee schedule, and statement narrative before raising an adjustment. The key is to confirm whether the difference is a valid fee, a missing ledger posting, or an incorrect deduction. In your answer, explain deducted charges, separate fee postings, net versus gross settlement, missing charge entries, reference differences, and the importance of validating fee agreements before adjustment. Question 16. How do you manage duplicate postings in Vostro reconciliation? Duplicate postings usually show up as two internal ledger entries matching one statement line, or two statement lines against one ledger entry. I validate the reference, amount, value date, payment system status, and settlement evidence before calling it duplicate. I never reverse solely based on appearance, because some transactions can legitimately repeat. Once confirmed, I raise an approved correction, track it to completion, and review whether matching rules or upstream controls need improvement. Be sure to mention identifying duplicate amount reference date combinations, checking source systems, confirming whether both entries settled, preventing incorrect reversal, raising accounting correction, and strengthening matching controls. Question 17. What is an unreconciled item aging report, and how do you use it? An aging report groups unreconciled items by how long they have remained open, such as 0 to 2 days, 3 to 5 days, 6 to 30 days, and over 30 days. I use it to prioritize high-risk and stale breaks, track ownership, and ensure escalation happens before items become control issues. It also helps management see trends by account, currency, or break type. A clean aging report shows both operational discipline and strong financial control. While answering, focus on exception monitoring by age buckets, prioritizing risk, identifying stale items, driving ownership, escalation, provisioning or write-off discussion, and management reporting. Question 18. How would you reconcile a Vostro account with multiple currencies? For multi-currency Vostro activity, I reconcile at the original currency level first, not just reporting currency equivalents. Each currency has its own balance, settlement rules, and value date impact. FX differences can arise from revaluation rates, conversion timing, or charges deducted in another currency. I would match transaction currency, settlement amount, exchange rate, and equivalent reporting values separately. Netting across currencies can hide real breaks, so currency-level proof is essential. Make sure to cover currency-level reconciliation, avoiding netting across currencies, FX revaluation differences, settlement currency, exchange rates, equivalent balances, and separate investigation of original and reporting currency amounts. Question 19. What is the impact of unresolved Vostro breaks on the bank? Unresolved Vostro breaks can lead to misstated client balances, inaccurate liquidity positions, incorrect interest calculations, and operational losses. A missing debit could mean the bank thinks funds are available when they are not. A stale credit may trigger client disputes or regulatory scrutiny. From a control perspective, aged breaks weaken balance sheet assurance and audit confidence. That is why I treat reconciliation as a risk control function, not just a matching exercise. In your answer, talk about misstated balances, liquidity risk, client disputes, incorrect interest, operational losses, regulatory findings, audit issues, and reputational damage if exceptions are not controlled. Question 20. How do you ensure completeness in Vostro reconciliation? Completeness means all expected data is present before matching begins. I check statement sequence numbers, opening and closing balance continuity, transaction counts, and control totals. I also confirm that files loaded without rejected records, and that the internal subledger agrees with the general ledger. If a feed is incomplete, a reconciliation can appear clean while missing transactions. So I prove data completeness first, then transaction matching, then final balance certification. Be sure to mention statement sequence checks, opening to closing balance validation, transaction count and amount control totals, source file completeness, rejected records, and reconciliation between subledger and general ledger. Question 21. How would you handle a reconciliation break caused by an incorrect account posting? If a transaction is posted to the wrong account, I first gather evidence from the payment instructions statement line, account number, and reference details. Then I identify the correct Vostro account and confirm with the relevant operations team. Any correction should follow approved maker-checker accounting procedures, usually through a reversal and reposting or transfer entry. After correction, I verify that both the incorrect account and correct account reconcile properly. While answering, focus on confirming evidence, identifying the correct account, obtaining approval, raising transfer or reversal entries, documenting rationale, and checking that both accounts reconcile afterward. Question 22. What information would you include in a reconciliation commentary? Good commentary should allow someone else to understand the break without reperforming the whole investigation. I include the amount, currency, account, value date, reference, break type, root cause, action taken, current owner, and expected resolution date. If there is risk, such as client impact or reporting impact, I mention it clearly. I avoid generic comments and update the narrative as the investigation progresses, so management reporting remains reliable. Make sure to cover clear break description, root cause, amount, currency, age, responsible team, actions completed, next steps, expected resolution date, risk impact, and evidence attached. Question 23. How do cutoff times affect Vostro reconciliation? Cutoff times matter because the ledger and external statement may not close at exactly the same time, especially across time zones. A payment processed after the statement cutoff may appear in the internal ledger today, but on the external statement tomorrow. Without understanding cutoffs, I might incorrectly raise a timing item as an error. I always check processing windows, statement generation time, and value date before classifying late-day items as breaks. In your answer, explain end-of-day processing, time zones, statement generation, late payments, back-valued entries, ledger versus statement timing, and why cutoff knowledge helps classify breaks correctly. Question 24. Describe a time you would escalate a Vostro reconciliation issue immediately. I would escalate immediately if the item is high value, aged beyond tolerance, client impacting, or suggests duplicate payment, wrong account posting, fraud, or sanctions-related concern. For example, a large debit on the statement with no internal record could affect available balance and liquidity. I would notify my manager, payments operations, and risk contacts as required, provide evidence, and keep the issue tracked until ownership and resolution are clear. Be sure to frame escalation around high-value, aged, or unusual items, client impact, suspected duplicate payment, fraud or compliance concern, balance mismatch, missing statement, and potential financial reporting impact. Question 25. What makes someone successful in a Vostro reconciliation role? Success in Vostro reconciliation comes from accuracy, curiosity, and strong control discipline. The person must understand payment flows, SWIFT references, debit-credit logic, value dates, and break ownership. Technical skills in Excel, reconciliation tools, and ledger systems help, but judgment is equally important. I would look for someone who can prioritize high-risk exceptions, communicate clearly with operations teams, document evidence, and close breaks without compromising controls. While answering, focus on attention to detail, understanding payment flows, analytical investigation, urgency, communication, control mindset, Excel or reconciliation tool skills, and ability to manage aged exceptions. If you are still with us, congratulations, you are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.